So, ladies and gentlemen, if you are waiting to time the market, you are already behind. If you're waiting for motivation to get started in the market, you are already behind. Ladies and gentlemen, if you need a simple investing strategy, stay into this and stay at the end of this video, and I'm going to teach you and show you guys a simple way how you can get invested in the stock market. Now, investing in the stock market is as easy as is, but some people, when we first get into this market, when I first got into this market, when a lot of people, when you first get into this market, all we are taught is that we need to buy companies low and sell them high. We aren't taught the little things that is going to keep longevity in this game. For example, a lot of us are motivated to make money, but motivation isn't enough to keep you in this game. Consistency. Consistency is what's going to keep you in this game. And it's consistency in a lot of areas, really, when you're investing. It's consistency in your deposits, is your consistency doing research, is your consistency building discipline, is your consistency in other areas in your life, right? Like that is also a part of investing, right? So, ladies and gentlemen, this is my like 57th video per se. There's 252 trading days out of the year, and I missed a couple videos, but this is my 57th video. I believe we're probably on day like 60 or so as far as trading days go. But this is proof in the pudding that you don't need a lot of money to get started. You do not need a lot of money to get started. And the only reason why the account is at this size is because I just recently deposited $5,000. I'm still talking to the person who has less than $500, less than 1,000, less than two, less than three, less than four. Even if you have less than $5,000, even if you have the $5,000, this is for you. Why? Because they taught you wrong, and I'm here to teach you right. Now, what I've been doing, if you haven't watched my previous videos, I recommend go ahead and watch previous videos. I have a simple, easy system which you don't need to be a rocket scientist in order to have success in the market. What does this system looks like? Well, I'm going to show it to you guys. Very simple. Back then, investing in the stock market, it like, for example, if I wanted this share of Bank of America, it would cost me $49.19. But today, era in 2026, I can buy a fraction of the stock. So I could buy a dollar's worth. But today I'm not gonna buy a dollar's worth. Why? Because I have rules in place to tell me whether or not I should buy. One of my rules is my average cost. My average cost meaning right now I'm $24 in to Bank of America. I'm up a dollar. So I'm $24 in. So I bought right here. You can see my history. I've been buying Bank of America. Once this decides to populate, all right. So that's not gonna populate. I guess my internet is being slow. But even from like here, these last three or these two, I've been buying fractional shares for a dollar. So my average cost of what I've been buying has been at like $47. And another thing too I want to explain is dividends. I just got paid my dividend for owning Bank of America. What is a dividend? So a dividend is when a company makes profit, they pay it out to the shareholders. So companies that pay high dividends or pay dividends, usually there's a balance between the stock appreciating and what they give you. Like for example, if a company gives a lot in dividends, usually the company's stable. They don't go up a lot. They don't go down a lot. Company, it's like your return. You either get the return on appreciation or you get the return on dividends. So Bank of America is a really great company for like both. It doesn't go up too much, doesn't go down too much, and they give pretty decent dividends. Like, look, they give you 28 cents a share. 28 cents a share, which, if you have a good amount of shares, you can make residual income off of this. So based on not even half of a share, a third of a share, I got 10 cents. And guess what? That 10 cents gets reinvested into my Bank of America. So I'm getting free money starting out little. Free money. And what? It was what, $24 of investment and I got 10 cents. I don't even think the bank pays that. And I got this within like a two. I think they pay dividends every 3 months, ladies and gentlemen. So that's Bank of America. And I'm not gonna buy Bank of America today because we're up, they're up. What I'm gonna buy is some SPY. SPY is a ETF which has the best 500 companies all in one. So if you don't want to necessarily pick individual companies, you can go with certain ETFs. Right now, my average cost is 663, and right now we're at 654. So I'm only gonna buy for $1 right now because we got wartime. The market has a lot of uncertainty. So we're not gonna go too crazy. We're gonna buy some lows as well. We're down on lows. Average cost 241, 231. My market value is about like $30. I'm gonna buy some more. People panic around this time, right? Like they panic because they put in a lot of money of what they can invest. They put a lot of it initially, versus I've been putting in dollars and I'm down pennies. Like, look, I'm down pennies versus if it was a lot more, yeah, I would feel it. So this is very important. This is a part of my strategies. Like I firmly believe it don't matter how much money you have, you should be breaking down that amount and you should be buying every single day. You shouldn't just have $5,000 and just throw it all at the wall. Next one here. We got Google. We're gonna buy some silver, gold. We're gonna get into the metals again. Hopefully the metals get another rip and we could sell out. I actually want to sell out of these things. And then I have some plays for you guys. I have some plays for you guys. I've been crushing these plays, man. This play has been making me a lot of money during this whole like downtrend. It's making me a lot of money. When I say a lot of money, I mean in comparison to what I have in the account, right? So I'm gonna show you guys percentages because I like to work off percentages. This percentage is so important. Um, but let me buy these fractional shares here. Boom. So we made all our purchases that we need to make today. And as you guys can see, that was super simple. That was super simple. I bought $1 of each company that I'm down on, and that's it. I didn't have to stare at a graph. I didn't have to put no technical charts up. I didn't have to do none of that. I just bought. I didn't care if the stock was down or up because eventually it's going to like wash itself out. And if you watch my videos, you would see that at one point, like I was up on every stock, and at one point I was down on every stock. So it's just like, listen, it goes. These are waves, and if I can ride the waves, if I could stay at float to ride the waves every single day, I'll be good. But when you get crashed and you get sunken and you drown, hey, you don't get that other opportunity. So what's been making me a lot of money? Look, last 3 months, 14%. 14%. Let's not even look at the dollar amount. 14%. 14%. Look, if I had 100K, that's 14 grand. 14 grand, baby. If I had a mil, it's 140,000. So 14% in 3 months. Um, not all of it has been realized yet, so still have some unrealized gains. But what's been making me a lot of money is this option play called a covered call. So, for example, today I have this one. I just did it today. What I did today, actually, which was smart. Thank God I did it. Um, I bought back the 46 contract, $46 strike contract for 293. I made a little bit of profit. So let's see what it's worth. I bought it for 293. I bought it back for 293. So the 46 is worth 405. 405. Whew, thank God I got out of it. Because now, when I got out of it, I made profit, and then my 100 shares are free. So I can sell it. I can get back into this 46 if I want to. And if I get back into the 46, now I'm getting a higher credit. So I made a pretty good move today on that part. What I also did was I got a contract that ends today. I am going to use one of my trading days. You could only do 3 trading days out of 5 trading days available. So I'm going to use one of my trading days today on this. I did a cover call on Intel that expires today for 10 bucks. This is free money. This is another strategy, guys, that they don't teach us when investing. And if we implement this into our investment strategy, there are other ways to make money besides buy low, sell high. Like if Intel is below $51 today, I get to keep my $10 and I get to keep my 100 shares. If Intel is above $51 at the end of expiration, I keep the $10 credit, but I'm forced to sell my 100 shares. But look, I am selling my 100 shares at $51. My average cost is $46. So that's about a what 49 $4.49. So it's a $449 profit plus the $10. So $459 profit right there. But let's say it doesn't happen. Cool. I keep my 100 shares and I keep the $10 credit. And what I'm planning to do is around um like right before the market close, I plan on rolling this contract into another expiration. I'll probably do the I gotta see here. Probably the 40 to be honest with you. I do the 40, I do the 40, and then if it keeps ripping, cool, it keeps ripping. And if it doesn't, I protect myself from a 9 point gap. And you might be asking yourself, like, why would you pick the $40 strike price if Intel is higher than $40 at the end of expiration? I have to sell it at 40, right? But right here, I get a $988 credit. $988 credit for doing so. So realistically, if I am obligated to sell, it's like I sold it at $49.88. Right now, the market is at $49.45. So if it drops down, let's say it drops down to 43 bucks, and I'm obligated to sell, it's like I sold it better than the market, right? Strategy. Um, so this is my goal. I'm thinking about doing this because we are in these like weird times of this war or whatever. So I want to be really cautious of what's going on. So um, I'm thinking about rolling that over around 3 o'clock. Eat some of this credit that I'm getting right now. And then the last play we have is Hims and Hers. I hope I get a sign, but I'm probably not going to get a signed. Um, Same thing. I got a covered call here. So I got $135 credit. Right now the contract is worth well, I got $128 of it to buy out of the contract. It's worth $7. If at the end of expiration, Hims and Hers is below 950, I keep my 100 shares, and I keep the 7. But what I'm just gonna do, I'm just gonna roll it, and I'm gonna do it in front of you guys. So I'm gonna roll the contract. What does that mean? I'm gonna move it out into a further period of time. So here's my thought process. I let's just say 128. Let's say 1.28. 1.28. I'm subtracting that from the 1950 to escape, meaning that I can get a strike price around here, around 18. Why? Because again, if Hims and Hers is below or above $18, I'm obligated to sell. Cool. But if it's above, it's as if I sold it for 1974. But if it's below, I get to keep my 100 shares and I get to keep the credit. But what I want to do is really bet against Hims and Hers because again, we're in really bad times with this whole market uncertainty and all that. So I really want to, like, if we do go down, I want to be covered. So I would be a, like, what, maybe even a 4 point spread. I'll do a 4 point spread. See if we melt down. Cool. I get to keep the credit, and then we keep it moving. So those are the plays, ladies and gentlemen. It's very simple, very easy. As you guys can see, I've been up, and it's not about profit. For me, it's always about protecting my portfolio. So even with that mindset and that strategy, it just forces me to stay up, have profit, because number one is protecting the portfolio, and number two is looking for moves, looking for things that could hedge my position, that can lower my risk, that can gain profit on other areas besides just holding on to the shares. So, ladies and gentlemen, I thank you guys for watching. Today's the last day of the week for trading, at least. Today's Thursday, tomorrow's Good Friday. So, have a good Friday. We see each other next week. And oh, if you guys aren't following me on my social medias, go ahead and follow me on TikTok and Instagram at Strictly Financial. And we talk again next week.